Welcome back to Squawk Box. The payment processing software company Stripe earning the top spot on this year's CNBC Disruptor 50 list. The most valued startup in Silicon Valley has made the list now 6 times in the last 8 years. And I spoke with Stripe's co-founder and president, John Collison, yesterday afternoon in a rare and exclusive interview, and started out by asking him how he thinks about the state of the economy from his vantage point as an online payment processor for so many different internet businesses.
At a macro level, we're seeing what you would expect, which is there has been a very sharp move from the offline economy to the online economy. And that's been very different on an industry by industry segment. There's some industries like, say, travel, which really slowed down, at least for a little bit. And then there are some industries like, say, grocery delivery remotely, which are up quite a bit. And then if you look at, if you go into some of the more granular data, it's interesting what we're seeing. One thing we're seeing is just there's a set of businesses that are seeing very big spikes in demand. And this is probably stuff you've already covered on the show, but, companies like, Zoom, who we power, announced that they're seeing a 20-fold increase in demand. Instacart announced that they've seen a 300% increase in customer demand. So the services that we rely on to sort of power working remotely or living during quarantine, those companies are seeing very major surges in demand. That's one part. The second thing we're seeing is the creation of new businesses or businesses that previously traded solely offline starting to move online, this being the push that caused that to be the case. We're actually seeing in our Stripe Atlas data, we've seen a tripling in the number of incorporations. So Stripe Atlas, as you know, is our product for incorporating a new business. So tripling in the number of incorporations since this time last year. And so that's maybe both brand new businesses or businesses starting to move online for the first time. And then lastly, we're seeing with the enterprises that we work with, we're seeing them starting to move much faster on initiatives that were maybe planned for a long time or they always wanted to get done, but the lockdown has really totally upended the urgency and prioritization of those things. And so we're working with companies like the Westfield retail chain or Toast, the restaurant software platform, to help them advance their COVID initiatives. So those are the kinds of changes that we're seeing.
Just go back, though, for a second, because you made reference to the idea of businesses, your second group of new businesses. And the question I'd ask you is, from what you can tell, how much of that is old businesses transitioning and how much of that is new businesses that are developing new business models and the like right here in the middle of this pandemic?
Yeah, so we don't have the sub-granular data to be able to say exactly for sure what the breakdown is, but we really are seeing a lot of both people taking time during this moment in time to build out a completely new business or a completely new line of business. We've seen all manner of things during the lockdown. Maybe one of my favorites was, I think it's youprobablyneedahaircut.com, which does remotely guided haircuts for people maybe cutting their partner's hair during lockdown. And that business is obviously, the market for remotely guided haircuts is much larger than it was. And then we're also seeing a huge amount of adaptation from especially, say, retail businesses, restaurants, moving from, solely in-person trading to starting to move online, doing, delivery and things like this. So we're seeing a mix.
So your business, to a large degree, has benefited or been one of the beneficiaries of the pandemic, so to speak. Obviously, it's accelerated the business. When you start to look at what that growth curve looks like, though, how does it change? Is it pulling that business forward? Is this sustainable? When you start to look at what the next year or two looks like, how has it changed?
I think the honest answer is no one knows right now what the long-term effects are. And I think it's certainly the case that the stock market is not the economy. You also can't extrapolate too much, I think, from the changes we've seen in this first 3 months of the effects from this is not going to be over anytime imminently. And I think we should reason about quite a different state of affairs in 1 year's time or in 2 years' time than maybe we see today.
You raised about $600 million in April. What do you plan to do with that money? And given some of the challenges that other businesses may have, do you imagine using some of that money to acquire rivals and the like?
Our main priority and part of our thinking in that fundraising was that we wanted to be dependable for the businesses on Stripe regardless of the outcomes that that took place, and especially back then in March when that took place, it was a very different and I would say more uncertain set of outcomes. Maybe with a bit more of a sense now as to what the world would look like a year from now. And not only did we want to be able to provide a really reliable service that businesses could use to accept money from around the world and do so with high availability and things like that, we also want to be able to invest during this time period, because we are still dissatisfied with the functionality in the Stripe platform. And so we just launched recently 5 new countries in Eastern Europe. We just launched global coverage, our direct Visa and MasterCard integrations. We want to continue to be able to make those product investments. We see 5 out of 6 new internet users coming online in places other than the United States and Western Europe. We want to be able to serve those internet users. COVID is not a phenomenon that's limited to us in the United States, and we want the Stripe product to reflect that. I think it's possible that we pursue M&A as one of the things we do with making those investments, but I would say we think about it at one degree of remove from that. And so we think about it in terms of investing to make Stripe the most robust, most reliable, most featureful platform for businesses operating online. If M&A is the right path through which to pursue that, great, let's do that. But we also think it may just be the case that we should be investing to build that in-house.